And what is up, everyone? I'm Scott Welsh, and welcome to Beating the Market podcast. We get together every week to talk about how to beat the market, strangely enough. And today's pretty much our most important topic. I mean, this is the crux of everything we do here on this YouTube channel and on my newsletters and blogs and everything else. I mean, this is it. So let's get right to it. 3 things we're going to cover. 1, what does trading for a living really mean? We think it sounds pretty self-evident, right? Do we really know what it means though? Because if we don't know what it means, we can't do it properly. Number 2, is anyone doing this right now? Tony Robbins tells us to model things we don't understand. Take someone who's actually doing it and then copy it, model it. Is there anyone doing what it is we're trying to talk about here? Number 3, is there a surefire way? You know, in the universe, there are surefire ways to be successful. We don't always want to hear it. We don't always think it's sexy, and we don't always do it. In fact, we rarely do what we're supposed to do, right? But anyway, we're going to talk about that. First, though, the disclaimer, please do not risk any money you cannot afford to lose. These numbers are hypothetical. I do hard research. I try to do research that's accurate, but they are hypothetical. These are not real trades. These are just meant for your thought-provoking entertainment, right? Okay, moving on. Happy Wednesday again. Yay! We're back on Wednesday. I switched to Friday because we had a live presentation last week, but we're back. Welcome back. Trading for a living. What does this really mean? All right, well, I'll give you one definition from all the emails I get, and that is trading for a living means we're taking trade after trade after trade. We're trading every day. I still get emails, even though I do outline the amount of trades that each robot or each particular system is supposed to take. Even though we know the average, I still get emails that didn't trade today, didn't trade today, didn't trade today. Well, it's not, is it supposed to trade every day, right? That's still, I mean, and I'm not criticizing anyone. I'm just saying that what an indicator of our mentality is that, right? If we get a robot, brand new robot, we want it to trade, 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 trade. That leads me to believe that trading for a living to us means trade, 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 right? But does it? Does it really? And they also think trading for a living is making $500 a day, $1,000 a day, $3,000 a day, 10% a month, 120% a year. That's trading. Da, 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 da. Is it? Is that really trading for a living? Right? Watch the movie Rounders. Kanish go in big on all the pots. Sorry, I watched a bunch of stuff on Rounders recently, so one of my favorite movies. Go watch. But anyway, that's one definition. Trade, 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 $1 million a month. Or is there another definition, which I also get a lot of emails about, that wants a big break? I want a big kill. I want a big win. I want to take $2,000 account and make it 50,000, right? That's how I have to trade for a living. I have to take my current circumstances and make it huge. I'm all for that. I will research that. I'm sure we'll talk about it. But is that really what trading for a living is? Taking nowhere and turning it into somewhere? And honestly, one thing that's never spoken about is, well, what happens next? What happens after you win the lottery, right? A lot of bad stuff after the lottery. What is it? 75% of lottery winners go broke again? Something like that, right? And someone just won $1 billion in South Carolina recently as I do this video. Interesting, over $1 billion actually. But think about that. I want to turn a small account. I want to turn a small account, and then what? Right? We're at a job, we're at our desk, we turn 2,000 into 100,000, and then what? Nobody talks about the and then what. And isn't that critical? What happens to that 100,000 next, right? As I've already mentioned, there are problems with these depictions of trading for a living. First of all, action does not equal high returns, period. I understand that if you're trading discretionarily in a prop firm on Wall Street and you're given $1 million account, maybe you do need to trade. Maybe that's how they make their money, right? Maybe they need to trade, 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 trade. Okay, I'm not saying it can't be done that way, but I'm also saying it very rarely is done that way. Well, I can't say very rarely because I haven't pulled every single trader on earth, but there are other ways, a lot of other ways. Trading every day doesn't mean more money. Not necessarily. They are not cause and effect, and that is very important. We have to have the right definition if we're really going to do it, right? Just because you want to turn pro in tennis doesn't mean you play 50 tournaments a year, 3 tournaments a month, or every weekend. Maybe you only play every other month. See what I'm saying? Trading for a living may not mean action. Number two, the big break is super hard. You know how hard it is to turn $2,000 into even 4,000? Super duper hard. Nobody does it. All right. Now, doesn't mean you can't do it. Doesn't mean I haven't seen big wins. Doesn't mean I haven't done it myself. It happens. But if that's what your idea of trading for a living is, then you're putting your success on a very low percentage in something very, very difficult. There might be an easier way. Might, right? But furthermore, to get that big gain, there are two real problems even with that. One is you got to find a system that does it. There aren't many systems that do it. I'll be honest with you. There are many, many systems that crank out profits, many, 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 many ways to do it. But as far as going for the big break, there are certain styles, at least that I've found, that you have to at least partake in. And the real problem, even if you have a system that can get you there, actually getting there is almost never done because we sabotage as emotional traders on our way there. The system will get us to doubling our account, but when we get a little bit of profit, we screw it up or we change trade size, blah, blah, blah. Okay. And of course, I just talked about it. And then what? If you double your account, and then what? If you took too much risk, you might lose it all. And that's not trading for a living. Making a big win and then screwing around with it, that is not the recipe for the rest of our lives. So obviously, if you're a big break thinker, there has to be another strategy on top of that, right? Once you get the money, you can't big break forever because then you put too much risk on the table. See, it's not an easy topic. That's why we're talking about it, and we'll probably talk about it many times more. All right, let's talk about models. Tony Robbins taught us. Let's learn. Is there a model for trading for a living? And if you're in the free newsletter, yes, there is. It's MMM, as I call it, or Mr. Money Mustache. I forget why this real life blogger named himself that. It's just a regular guy. It's an awesome site. I read it all the time. It's Mr. Money Mustache. Look it up if you're interested. What's his story? Well, if you read the email newsletter, you know, I'll tell you again. He and his wife were engineers. They had high-paying jobs. They did not like it. So they said, let's save our money. They just didn't believe in living extravagantly. So they cut their expenses, they saved their money, and they got to a really nice nest egg. And then they invested all of it, pretty much, right? At least according to him, in the market. They bought index funds. And now they live, and they have since what, 2000 and, well, about 10 years, according to the blog. For about 10 years, they have just lived off interest, period. They saved money and lived off the interest. Interesting, huh? And they don't live meagerly. Now, they chose a cheap place to live in Colorado where it's beautiful and not expensive. They don't really drive cars. They try to buy, right? They have a lifestyle that's cheap, but he makes a very strong point that he lives extravagantly. Just because you live under your means doesn't mean you can't live extravagantly. It is fascinating, and he's doing it. He's doing the thing we're talking about. No jobs, right? He takes money on the side, maybe for pay for fun, because he likes to do it, but they don't work. All of their money is created by trading for a living. Is trading, investing in index funds? Another topic, right? Which leads us right into that surefire process. Mr. Money Mustache gave it to us, and he's doing it, and he's writing about it. It's right there under our noses. Here is the surefire path. Save money like a crazy person. Stop spending. Get a budget and stick to it. Number two, build up your trading account as high as possible. Well, what does that mean? I'm going to say a number, and you won't like it, right? But the number that he got to is roughly about $650,000. Actually, it might be closer to $1 million, right? Now, I told you had high-paying jobs, but I have done the research that if you get to about 650,000, if you live not crazy, you can absolutely invest in index funds and you are done. If you have saved that much, you are done for life. You are fine, right? Surefire success. But the third part of this is once you save and once your trading account is in that big money range, You have to then trust a safe system for the rest of your life, okay? You need a system that will throw off profits to pay your bills forever. You need to believe in it forever, okay? Now, what is that system? Well, for him, it's the market. He believes that the stock market is eternal. Thus, index funds will return 7 or 8% forever on average. Not every year, of course, right? But on average, he trusts that. So is that it? I mean, is that the safest thing to trust? We'll talk about that in a second. But there isn't any system better than this, right? It's not trading a ton. He trades zero, right? And it's not making 10% a month. He trusts the stock market. But he saved Surefire Way. You can, if you are on budget, pretty much you're set for life, right? I mean, the things that get us off balance and lose for us are high leverage, extra spending. If your trading account is high, then you can find something safe, right? This is a can't lose type of recipe, but maybe that applies to you, maybe it doesn't. Well, at least part of it can apply to all of us, I would think. All right. But then we have to discuss the real thing, and that is what is quote unquote safe. If the stock market stops throwing off 7% per year on average, then this is no longer safe, and he has to make a different plan. Now, going back to the 1920s or however far back you want to go, the market has averaged this. Okay. So I guess that's fine. But if you don't trust the stock market, then you've got a problem, right? We have to choose something that's safe. It doesn't have to win all the time, but you have to believe that it's eternal and it will throw off money in the end on a regular, expectable basis, right? Again, Mr. Money Mustache says this is the market. He has bought the Kool-Aid of the efficient market and he doesn't believe that anyone can trade. That's just I don't agree. Okay, I mean, I can't say how strongly I disagree with any of that thinking, but the site is awesome. The blogger, Mr. Money Mustache, is awesome. I believe in some of the things that he says. I just believe that we can do better, and I strongly disagree. Right? And furthermore, he's saved enough for the bad time. So what happens when the market is down? He's saved enough where all of that is built in. He knows what to save when the market goes down. He still pulls his expenses out. He's trading for a living, people. That's what it means. Even if your trading is poor, you pull that money out, right? Okay. Is there something better than index funds? Well, I just said so, right? Let's talk about it. I believe that daily chart trading, not index funds, I believe that daily chart trading is safer than day trading. What does that mean? I love day trading. I've built day trading robots. I trade day trading, all right? Make no mistake. But signals are safer, are more reliable on bigger charts. Daily chart signals are better than 15-minute chart signals. Period. End of discussion. You cannot argue anything else. A signal on a 15, a 5, a 1 is almost practically noise. I mean, it's just random nothing, right? Are there ways around making your signal a little bit stronger? Of course, but on a daily chart, signals mean something, whatever your signals are, okay? Indicators, which I love, are made for daily charts, not day trading. If you want your indicator to work and be safe, then do it on a daily chart, okay? Now, furthermore, one more point. If you're day trading, you have to add some filters. You have to add some things to strengthen your signal. And the more things you add, guess where that leads us? That's when the people cry, over optimization, over optimization. And they say, your system won't work and day trading doesn't work and nothing works because you over optimize and you curve fit. Curve fitting, right? So the more variables you add, though, the more danger there is. I understand that. I acknowledge that. So if you want to stay away from over optimization, if you want to stop worrying, will my system break tomorrow? Did I add too many variables? Then get off a day trading chart. get onto a daily chart. You can still optimize in a daily chart, but the optimizing almost assuredly will be more robust and it will be more reliable. I'm finding that out more and more and more and more. So, that all being said, let's stick to a daily chart, right? We're trying to retire tomorrow and we're going to use indicators because, I mean, they work. How many times do I have to argue that they work, right? The research I've shown, I have yet to see any sort of reasonable argument that indicators don't work on daily charts. They work on other things too, but the daily charts, okay. And let's use an indicator that's been around forever, since at least the 80s, and that's stochastics. I use slow stochastics. It's a little more calm signal, okay? And let's use Forex this time, right? Because we get that extra leverage, okay? Get a lot of requests for Forex anyway, and I've been looking at Forex since 2009. So that's where we're going to trade for a living, okay? We've got our money saved. We've got our budget under control. Here's our safe trading method, all right? Here is the entry, all right? Price must go down, so our stochastic indicator must go down into oversold. Oversold is 20 on the chart, right? Our stochastic is set to 29 length. Guess what? The longer the length on your indicator, the less signals it gives. Guess what? That means it's a little more reliable, right? Doesn't mean you can't use a different length. I'm just telling you. I've found that if you want something safe, again in quotes, did you see my quotes? If you want something safer, go a little bit higher. I think it's defaulted at 14. This is about double that. All right, so 29 length drops down into 20 oversold. This one has a time exit of 13 bars. And for our super safe system, we've got 165 take profit, and 275 stop loss pips. Okay, so there you go. Price goes down into oversold. And then the blue line, fast line, crosses over the red line. Hard to see it, but it is. The blue line now has crossed above. Once it does that, you're in at the open of the next bar, right? This is not a new system, but we're going over it again. If you're a veteran of the channel, you know all this already, but these are different parameters set up for this system than we've talked about before. So that is new, right? And this one got out on a timed exit. Got in, there's our profit, okay? And that's how we make money. That's how we're going to trade for a living. Well, what kind of money does something like that on the, did you catch that? The dollar yen daily chart? Okay, just making sure. The report, this is for 10 years, right? 10 years and 6 months, actually. Total net profit using one full, actually, no, I'm sorry, scratch that. 0.75 lots, not a full lot. This is 0.75, okay? That's important, 0.75 lots. It cranks out in 10 years, $26,000 worth of profit. Now, this is a hypothetical 10K account. Hypothetical 10K. What if we saved 100,000? Multiply by 10, and this would have brought us 260,000. What if we did $1 million? Right? You can see that if our expenses are reasonable, if we've saved up enough money, right, this could pay our bills. Okay. Anyway, 26,000. There's your max drawdown of 55.92. That might be too high for you on a hypothetical 10K account, but guess what? That's what the market's max drawdown is, so I matched it, okay? The market lost about 50%, depending on what you look at for the market. In that 2008, 2009 time period, it lost a ton, okay? So I matched that up. So that is similar and comparable. So what's the bottom line? Using an indicator on a daily chart can do a lot better than the market. This is almost twice as much money as you would have received. Everything else the same on an index fund. Look it up. About 10% a year on an index fund since in this time period. This is a lot more than that. Same drawdown, almost double the money, right? So if you think that that is a viable system, it would have destroyed just keeping it in an index fund, which means that you took all your expenses out and you had money left over. Pretty awesome, okay? Using an indicator and daily chart can do a lot better than the market, a lot better, but it really comes down to this, and maybe this is also the crux of our crux. What do you trust? If you really were going to retire tomorrow and if you've saved $1 million or $500,000 and you're ready to put your trust in a trading system, are you going to pick the market or are you going to pick a system like this? You're going to pick a day trading system that might be over optimized, right? What are you going to pick? I've tried to make the case, right? I'm not selling you anything. I'm just making the case to get your brain cells bouncing. But if you're a skeptic and only the market is eternal, then that's what you do. But if you're a trader, doesn't that mean that we have to trade and we have to eventually trust a trading chart? If we're trading for a living, we have to trade, right? We want to trade, don't have to do anything, right? So we have to trust something if we're going to trade for a living. So if you're going to trust trading, what do you think about the stochastic chart? Daily chart, reliable. It was long only, by the way, in case you didn't guess. I like to go long only on the Japanese yen pairs, right? That's the bottom line. If you've done step one, step two, budget in order and saved up a bunch of money, you have to trust the system. Is this trustworthy enough for you? And that's the big question. But you've got something right now. Go test it out. Confirm my numbers. If you want to compare it to an index fund, guess what'll do better, right? If you're on the email list, I've got more examples of stuff like this, so please get on that email list. It's free. Get your latest updates at scottwellstrategies.com. That's my website, and that's how you get in touch with me, blah, blah, blah. All right, that's all for this week. I will be back next week with more stuff. Bye for now.